Welcome to All About Stocks on ET Now. I'm glad you joined us this week. We've had a really big week. Disappointing growth numbers, then a scary inflation number, a hike in petrol prices, and finally a rate hike from the RBI. Now, there's been a lot going on and we're going to help you through it. We find out that you can profit from each of these announcements by finding the right stocks to put your money in. Now, before we start the show, let me quickly tell you what we have lined up over the next half hour. We're going to tell you how you can profit from the interest rate hikes and how it's going to impact the equity markets. Paras Adenwala's stock picks for this week is BSC Tillers and Tractors and Dhanuka Agritech. Find out why you should be buying these stocks now. And can you profit from a hike in petrol prices? We'll find the oil marketing company that you should be investing in. Right, before we get to all of that, first let me bring in my colleague Abhishek, who brings us the latest numbers on how the market did this week, especially for those of you who've been in the office and haven't had the time to track the market. Take a look.
Clearly, this week has been a week very different from last time because this time around small caps and mid caps have actually underperformed the index. The Sensex and Nifty were up 0.2 to 0.4% respectively. This has been a flattish week, and why not? Because the RBI, all important RBI meet was supposed to happen this week. The decision came. It was a 25 basis point hike as far as key rates are concerned, and that pretty much put to halt the speculation that there might be a rate cut or a pause in offering. In fact, RBI is pretty much on record saying that it's premature to change the policy stance, and it's imperative to persist with anti-inflation stance, which means the rate stance of RBI would be guided by inflation, which is a structural problem, in the near term as far as the Indian economy is concerned. On the gaining side, we got Tata Motors, Infosys and NTPC gaining 5% each on back of corporate development and fund buying in Sensex. On the losing side, we had Tata Steel, largely because of falling steel demand globally, L&T and Bharti Airtel, which declined, 5% and 3.5% respectively. But mid-caps made a name for themselves again. Shree Global, was up 20-odd%. Names like SKF Micro were flying 16% gain for the week. On the small cap side as well, Evron was up 30%. ARSS Infra was up at 28-odd%. Clearly, high beta, outperformed this week, and that was the thing to watch out, going forward as well.
Right now, like Abhishek was telling us, the biggest story was the fact that the RBI raised the benchmark interest rate by 0.25% on Friday. But this is the 12th increase we've seen in the last year or so. Now, this is really an attempt to control soaring inflation, but it affects rate-sensitive sectors like banking, real estate, and auto. Thankfully, we have Prakash Diwan right now to tell us how this is going to affect the stocks in your portfolio and which stocks you should be buying right now. Prakash, thank you so much for joining us. Let's start by talking about banking. Now, we know that banking stocks tend to bottom out when the rate hikes reach their peak, and we know there are no more hikes to come. So in your opinion, have we reached that peak right now, or are you expecting more hikes from the RBI in the future?
So my sense is, yes, the interest rate peaking cycle is possibly come to an end, or is almost very close to the end. It's a question of conjecture whether there could be another hike, but distinctly it doesn't seem to be very imminent and very urgent anymore. So possibly, yes, to answer your question, we could be seeing one of the last hikes in this phase of the interest rate hardening cycle.
Right, so are there any banking stocks right now that you would recommend to viewers who are watching, who have a 3 to 4 year horizon?
Banking stocks could possibly start looking slightly better off with an interest rate, pause in interest rate hardening. But that really doesn't still make them very attractive for a couple of reasons. One is some of the larger PSU banks are in dire need of adding their Tier 1, Tier 2 capital, especially to meet with the Basel III norms which are around the corner. So I would believe that in terms of being able to grow as stupendously as they've done in the last 24-36 months, we might not see those kind of credit growth rates that we got used to, and that could also affect their NIMs or the margins. And at the same time, you have the provisioning impact, which could probably eat into their margins from a NPA side. So, banking stocks have quite a few tough things to get over. No doubt, with interest rates not going up anymore, it becomes much easier for them to grapple these operational issues. So, I would be very selective while going into banking. I would look at banks like ICICI, maybe Axis, the ones who have adequate capital on the Tier 1 side, and where they may not need fresh infusion of capital in tough liquidity conditions. So I wouldn't say a thumbs up for all banking stocks, but as I said, be slightly selective and going for the stronger ones, the more stronger balance sheets within the banks, and choose those.
Prakash, the other sector that gets affected by rate hikes is, of course, auto. We've seen that effect come in. We've seen sales drop. But we also know that Tata Motors has had some good numbers come in from Jaguar Land Rover. We also know that Mahindra & Mahindra is very strong. So when you're looking at the auto sector right now, is there a stock there that you see that makes sense at these values?
Certainly. I mean, interest rates not going up any further beyond what we've seen today morning is distinctly a good sign for auto companies, especially two-wheelers will continue to ride the wave. I would probably look at Bajaj Auto to give some strong upside, maybe all the way to 1750, 1760 also in the near term. TVS also looks quite strong from that perspective. And on the four-wheeler side, M&M distinctly stands out as a very clear choice. Maruti has its share of issues, though till those get clear, I wouldn't really look into buying into it. But yes, M&M and Tata Motors on the four-wheeler side and Bajaj Auto and TVS Motors distinctly are on the buy list now.
Finally, the real estate sector that's been beaten down all year, but for the benefit of viewers who are probably still holding on to a real estate stock or two, do you see redemption for that sector around the corner, or would you suggest they book their losses right now?
You know, if you haven't been able to get out of real estate stocks when they started the journey downwards, and it was a real racy, pacey journey of sorts, you could possibly get out in terms of whenever you see some of the levels come back, not necessarily the same old levels would come back, but whenever you see some significant rise in prices thanks to the kind of volatility that we have, you see spikes happen in the likes of DLF, HKIL, Unitech. I would recommend people book profits or book losses if that were to be. Get out, wait for buying into the real estate sector only when fundamentally things start changing on the ground, and that could possibly be still at least, if not more, but 2 to 3 quarters away. So book profits, book losses, whatever situation you may be in, but don't stay put and wait for it to come down, because the sector rotation itself could make real estate not so fancied when fresh liquidity comes into our market. So real estate would probably not be top of the list, and hence you will not see that kind of spike or that momentum build very soon.
Prakash, the other big news that we heard was the 3 rupee 14 paise hike in petrol prices this week. Terrible news for those of us who own petrol cars. Good news for those of us who own stocks of oil marketing companies like HPCL, Bharat Petroleum and Indian Oil Corporation. Now, these stocks were up between 3 and 6% following that news of that petrol hike. Prakash, we know that all oil marketing companies stand to gain when there is a hike in petrol prices. But when you're looking at them right now, is there one among these stocks that you think is the strongest, that makes sense at these values for us to put our money into?
Out of the OMCs, the most balanced happens to be BPCL for the simple reason that it has the portfolio which has a healthy mix of not only oil but also gas. In fact, they've expanded or started spending quite a bit of resources into augmenting their gas capacity. They also have investments into the likes of Petronet, LNG and some of the other gas utilities. So that's going to help them make sure that either side of the oil and gas segment, whether it's oil that does well or gas that does well, they stand to benefit. So, and then if you have the cooking gas LPG cylinder restrictions coming through, I think again that's going to be an added advantage to some of these players, particularly BPCL. So that distinctly is the choice out of these.
BPCL is the pick coming in from Prakash. Thank you so much for joining us on the show, Prakash, and answering all of our questions. We look forward to having you back on All About Stocks soon. On the other side of this break, Paras Adenwala joins us with stock picks that he thinks we should be buying. We'll tell you why on the other side.